What's going on, everyone? Hootmoney here with another video for you guys today. Hope you guys are having a good week despite what is going on in the world. I know it can be difficult when we are going through these times of war and whatnot, so make sure you guys are in check first before you guys check in on your stocks. That's just what I wanted to say about that. Anyways, I hope you guys enjoy this video. I'm going to be talking about why the stock market is going up once Russia invaded Ukraine, because you'd think that causing all of these geopolitical tensions between Ukraine and Russia, NATO, Western Europe, etc., you'd think that would hurt the stock market because that's a huge sector of the economy. But the stock market rallied off of this. Now, it's super easy to just write this off as sell the rumor, buy the news, sell the uncertainty, buy the certainty. However, there are actual economic implications that came from this that actually does boost the value of equities. So I'm going to be going over that in this video. So if you guys enjoy, make sure you hit a thumbs up on the video, like the video down below, subscribe to the channel if you guys are new. Without further ado, let's get right into the video. All right, so we're going to take a look at QQQ rather than SPY because QQQ has been a lot more volatile. So since we got the rumors of Russia invading Ukraine, QQQ went down about 13%. This is more so than SPY. SPY went down about 10%. Now, because of the Ukraine invasion, there was a gap down in QQQ, only about 3%. A lot of it was being priced in beforehand. But as soon as market opened yesterday, we rallied from a low about 9%, being one of the biggest rallies in NASDAQ history in just a few days. So how does this make sense? The whole European economy is now impacted by this invasion, and this isn't going to blow over in just a few days, most likely. The reason that QQQ and SPY and just all of these indexes in general have rallied is not due to the fact that there is now certainty in the market, although that might play a tiny role. It's more so due to the fact that other things have not been priced in, such as sanctions as of yesterday, and the President Biden spoke about sanctions yesterday in yesterday's meeting, which actually ignited more of this rally. It also has to do with how the Federal Reserve will be reacting to this situation. So we're going to be going over those two things mainly. And I did post about this already on Twitter, so follow me on Twitter if you want these updates at HootmoneyYT. Less pressure on the Fed for a 50 basis point hike in March. And the SWIFT payment system, which we'll get more into later in the video, is still open for Russian commerce, so Europe can still get energy from Russia. So these, in my opinion, are the two main things bringing up the market. I briefly want to thank the sponsor of today's video, which is Moomoo, which is a licensed FINRA stock trading and investing brokerage that does absolutely zero payment for order flow. They're running a promotion right now where all you have to do is deposit $1 on their platform to get up to $7,000 in free stock. Also, if you deposit $100, you can get a free share of AMC, which I believe is trading around $17 a share right now. You also could potentially deposit $2,000, get up to $3,500 each, bringing your potential value up to like $14,000 or something absolutely ridiculous. But honestly, I think the $1 to get up to $7,000 is an absolute no-brainer. I've seen someone in my chat actually get a free share of Apple with this. So they deposit $1, they get a free share of Apple. They've traded it up to $700, literally for free, out of thin air. Talk about money printing. Moomoo's got you covered. Anyways, if you want to do this, all you have to do is click the link in the description or pinned comment section of this video, make an account on their website, connect your bank account, deposit $1, and boom, you are all set to go. Those stocks will be deposited right in your account. Anyways, let's get right back into the video. So currently, the Federal Reserve is worried about high inflation. We're at almost a 40-year high of inflation right now, which is absolutely crazy. So the Federal Reserve needs to raise interest rates in order to fight that. Back in February, St. Louis Fed President Jim Bullard, which is a hawk of the Federal Reserve, said that he's in support of a 50 basis point hike or 0.5% hike in March when the Federal Reserve meets. The Fed has never raised interest rates by more than 0.25% or 25 basis points since the year 2000 or the dot-com bubble. However, because of the Ukraine invasion, because of a bunch of different economic effects that this Ukraine invasion by Russia will have, similar to the pandemic, this may ignite a more dovish stance by the Fed. And this article suggests, but economists say the evolving situation in Ukraine introduces a whole new set of uncertainties to global recovery, still facing the challenges of the pandemic. Disruptions to the Russian oil and gas supply are pushing energy prices higher, and Ukraine's importance to the European economy is already raising questions about the impact to real income and growth across the entire continent. With the picture unclear, Fed watchers say policymakers stateside are likely to hold back from double bump in rates, as Fed officials defer to options less likely to rattle the already sensitive financial markets. So, because the global economy is being affected by the Russian invasion of Ukraine, the Fed, it's their job to have an accommodative monetary policy for this changing economy. So now that the economy has changed due to the Russian invasion of Ukraine, the Fed is likely to be a bit more dovish and only do a 25 basis point hike in March opposed to a 50 basis point hike. So this is why tech is reacting more positively than the S&P 500 or the Dow. Tech is up 8% as we speak right now. SPY is up 6% from lows, and the Dow Jones is up 5.42% from lows. So it's essentially affecting tech the most, and tech is having the strongest recovery because they're the most reliant on the Federal Reserve and lower interest rates. If the Fed doesn't raise interest rates as much, they only do a 25 basis point hike in March, that would have a greater effect on technology stocks and bring up technology stocks valuations. Now, the second thing we need to talk about is oil. So oil is huge because Russia currently supplies about 40% of oil to Europe. They also supply roughly 5% of the United States oil. Forgive me if I'm wrong about that exact number, but as you guys can see, oil has been running up greatly over the past month. So with Russia invading Ukraine, this will force the world to have less dependence on Russian oil, bringing up the oil prices for other suppliers, such as the United States Oil Fund, bringing up the cost of oil, which affects gasoline prices, etc. So as you guys can see right here, there was an initial spike of about 6% on the United States Oil Fund in pre-market yesterday once that news of Ukraine invading did in fact hit. However, as you guys can see right here, it did end up dipping greatly, down 9%, so even more so than it was before after the market opened the next day. So why does oil go down in price? If we're thinking simple economics here, supply and demand, if the world is going to try to cut ties with Russia and their dependence on Russian oil, the supply, the worldwide supply for oil would go down. The effect on the price should be going up. That's why it had that 6% knee-jerk reaction to the upside in the first place. Why did it sell off once market open, and now it's trading at lower than it was 2 days ago? This is because the United States and the European Union are unlikely to cut Russia off of the SWIFT payment system. So SWIFT is the Society for Worldwide Interbank Financial Telecommunication. It's an intermediary and executor of financial transactions between banks worldwide. So TLDR, SWIFT essentially allows countries to pay each other, including countries in Europe, to pay Russia for gas or oil. So essentially what the stock market was pricing in beforehand was a decreased amount of commerce with Russia for oil. And this would have a very large economic impact on the global economy because, again, Europe relies on Russia for 40% of their oil. So if Europe can't get oil from Russia, they can't get 40% of their oil supply, This would lead to an energy crisis. This would lead to oil going through the roof, well over $100 per barrel, and it would essentially really hurt the economy. So by allowing Russia to continue to use the SWIFT payment system, so essentially allowing Europe for the most part to pay Russia for oil imports still, and Russia gets paid for their oil exports, it allows that commerce to continue to happen. There's less of a strain on the European economy, less of a chance for an energy crisis, and in a result, this does in fact have a spillover effect to the S&P 500, the NASDAQ, and the Dow Jones, because the world economy can still function. No energy crisis in Europe means that US companies can continue to make money there in Europe, etc. You can also see, looking at the Russia index, when it opened earlier today, it jumped up about 25% after these sanctions were put in place. So again, why would the Russian stock market jump up 20+% after getting sanctioned by basically every country in the world? Again, it's because they can continue to use the SWIFT payment system between Russia and Europe for the most part. They can continue to export their oil and get paid for it, boosting up the Russian economy. The other sanctions that were put in place, they will have an effect, but they're likely to not really kick in for quite some time. So the immediate effect of being able to continue to use the SWIFT payment system gave an immediate uptick. It gave immediate value to the Russian economy. So again, it's easy to say that there was so much uncertainty in the market before Russia invaded Ukraine, and now that Russia has finally invaded, it did in fact bring certainty. However, the true reason why the S&P 500 rallied is not because of certainty bringing actually being brought into the market, because there's still tons of uncertainty. I mean, Taiwan can be invaded by China. Russia can take over Kiev. The Federal Reserve can still raise interest rates 50 basis points. But the real reason is because the Fed is less likely to raise those interest rates 50 basis points. They're probably going to do only 25 basis points. We'll see what ends up happening. That's not until March. And because Russia can still transact in oil, there's not going to be an energy crisis in Europe. The European economy will still be functioning. It's not going to be taking a huge hit from this. There are legit fundamental reasons behind this rally in the S&P 500. And I encourage you guys to go out there, do your own research, because it could be written off as certainty was brought to the market, markets rally. But it's really not that simple. Anyways, I hope you guys enjoyed the video. Drop a like if you guys did. Subscribe to the channel if you are new. And check out Moomoo if you want up to $7,000 in free stock, as long as you deposit $1 on their platform. You can find that using the links in the description or pinned comment section. Also, if you want all of my buy and sell alerts, Hootmoney trade alerts, you can find that using the first link in the description. It's been great. My trading account has been doing absolutely phenomenal this week. I'll be seeing you guys next time. Have a wonderful day.